The stream is live. All right, that was just the most awkward thing ever. Sorry about that. So awkward. Give me 1 second. All right. Just a little technical difficulties. All right. Sorry, I did not know that I was live. Usually there's like a countdown for me to come on live. Well, now I am, right? Now I know. So, welcome to my show. No hat today, no great one, right? It's just, it's an after hours market review. And we don't have to just talk about the review of the market. We could talk about, what plays you're looking to get into, or we could pull up charts and look at the chart that you want to look at, and how would I, get into a certain play, right? So a lot of people that are in SOC trading Discord know who I am, right? And I do live streams. I give out alerts, and I give out alerts on almost everything, either SPY, QQQ, sometimes Tesla, Apple, Google, you name it. I like to play everything. So, what was the market like today? They went up, went down, went up, right? Like just a normal day, right? Going up, going down. But are you getting into plays when it's at the bottom, or are you getting plays into when it's at the top, right? Like, what are you getting into? That's the main question that I like to ask people. Where do you get your play at, and why do you choose a certain play? That you Do you guys hear a repeat? Um, is it? You guys shouldn't hear a repeat. All right, tell me, is that better? Hopefully that's better. All right, so like I said, the market is it's its own thing, right? And I've seen a lot of people, what they do is that they um it's not better. All right. Um yeah, I don't even know why it's doing that. All right. Well, hopefully when our Carlos gets on and he can fix that for you guys. All right. So, as I was saying, was that where was I saying? Yeah. Oh, okay. Yeah. So, market review. What did the market do today? Right. Besides going up, going down, going up, everybody knows that. It's like they're saying that. Okay, well, um, it's easy to look after the play is over, right? After the day is over, like, oh, I could have done this, I could have done that, and or you did this or you did that, right? And it's just like you're in that situation where it's easy right now. Like I could pull up something and I'll tell you, like, hey, this is easy to look at, right? And we can see where you could have gone into calls, you could have gone into puts or whatnot. Um, Everybody can do that. Anybody can do that, right? But the real concept that we want to talk about is why would a play happen, right? Why would we generate into that specific play? Or why do we look at certain tickers? Why do we look at certain market structures? Those are the things that you really, really want to pay attention to. So when we saw, we looked at S&P 500. A lot of people like playing SPY, right? And it's easy to play. It is. But a lot of people lose a lot of money on SPY. Why? Because they're over leveraged, right? If you're over leveraging, you're going to have a hard time making money, right? And no one's going to tell you something that I'm about to tell you right now. No one's going to tell you this, but it's true. Okay. Out of all your trades that you take, believe it or not, 70% of your trades, 70%, let me repeat that again, 70% of the trades that you take are profitable. It's the 30% that you're getting into that you're not profitable. So you hold on to your losers, your 30%, and wait for that miracle or that rebound for you to go green. or you feel like it's going to come back to you, right? And you don't cut it quick enough. But if you're able to cut those quick enough, the 70% trades that are winners, you're going to make quite a bit of profit. And a lot of traders don't understand that. They feel like every single play that they get into is a loss. And then they turn it around and that play turns out to be a green play. It was just the entry. It was a timing of the entry that you got into that was probably a bad trade at that moment. But 70% of your trades are actually profitable. So I hear a lot of people say, oh, you can't make money in the market. No, 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 pumpkin pie. No, you could definitely make profits. The market is there to give you money. It's just you have to learn how to take the money, especially with days like today. There was a lot of chop. It's a lot of chops, and we'll look at some charts in a few, but there are a lot of chops. And when you have choppy days or you have a choppy moment, why even trade that day? Or why even trade that moment? Because everybody wants to get into a play so dang quick, right? They're like, okay, I got to get into a play. I got to get into a play. No, you don't have to get into a play. If the setup for you is not right, then don't get into the play. It's very simple. Um, so if you guys have questions, feel free to put in the comments. If you want to look at a specific chart and I can go over it, what I'm thinking, what potentially could happen, where is a good entry, where is a good exit strategy, please let me know. And I'll more than welcome to show some charts up. And I know everybody does that. I know there are gurus out there that talk about the charts and XY, right? But not a lot of people talk about the actual like fundamentals, right? Like why getting into the specific play or where is the exit strategy. And that's what I want to teach you, right? That's what I want to talk about is that we're going to look at the chart. We're going to look at, how the market played out today, right? We're going to go into details. We're going to see it. But I need you to understand where to cut your losses at, how to look for that. Okay, I need to cut my losses. Because a lot of people, that's they have a hard time grasping that. Once you're able to grasp how to take your losses, um, yeah, utilities is taking a because the yields are up, right? And we're going to go over XLU in a little bit and utilities. Really, really upset about that. The RSI is like at 15 right now, which is the lowest it's been since pre-COVID. And that's insane, right? So utilities is just taking a major dump. And just as quick as is taking a dump, it's just as quick as it's going to pop right back up, right? The entire ticker, the entire sector is in oversold. That's because the yields are going up, right? Once the yields are going up, it makes it very difficult for utilities to go up. Now, what's happening in the next couple months? It's winter time, right? It's winter time. So energy starts going up, right? Utilities, all those kind of things that play into utility sector starts kind of going up because that's where the demand is at that time, right? So understanding that and understanding when to look for a certain place and swing place, giving yourself those few extra months out just in case if your play is wrong or at that time is wrong or is a bad, it's a bad trade or you feel like it is a great trade, but it's just you got in a little too early, right? And I'll talk about one of my swing plays that I'm in, which is XLU, why I got into it, why I added today, and where my exit strategy would be, right? So, we'll go over that part in a bit. So let me show you a chart. I want to show you some charts, and I want to go over, um, you know, the charts with you guys. So let me just share my screen real quick. All right. So give me one moment. All right. So right now I have Tesla up. Right. This is just Tesla itself. Um, and you can see that the market opened, how it kind of came down, then just popped up. And then it found a demand, after its drop, it found a consolidation period, which is right here, which is this basically line, this price action right here. And where did we get that price action from? So if we kind of zoom in, it's basically where this initial drop happened, right? When that drop happens, basically it's a huge red candle. Obviously, it made its way back up, But at that time, that's a nice area to see how price action comes into play. And then you see this doji candle right here, and the top of that doji candle is that base of that candle, which is where we pretty much interacted throughout the day. Now, that's just I was just looking at Tesla, so that's the only reason why I pulled it up. So a lot of people look at SPY, right? And right now, I don't have any pre-market or after hours in this chart. I add it when I feel like I need to add it, but I don't really look to add it right now. So if you're not seeing like, hey, why is there no after hour movements, or why is there no pre-market movements? Well, it's simply because I just wanted to see how the chart is prior to um, prior to the opening session. So one of the very first things that I do, that I try to teach, some of our members, is this, right? So I look at the previous day, which was Friday, and I see every area where they had either like a pump and then a drop, like this right here. This is a big drop, and so what I'll do is like I'll start putting in levels where price action can typically go to when that drop happens, right? So when you see this drop right here, I usually put on the base. I never put on the wick. I put it on the base, and then it fell through. Same concept now. When I look at this right here, I look for a pivot point where market structure kind of went up. It kind of consolidated right here, right? So when you see price action trading within a certain range, that is called consolidation, right? And they're consolidating at that period, and it's going to go either up or down, right? After that consolidation, this is your chop. This is your chop. You don't want to play in this chop, right? You never want to play in that chop. So when the market kind of went back up, uh, it was this section right here. So now what I'll do is, okay, well, where did it close at, right? And then, where was there some sort of resistance, where price had a trouble going up, going above, and that is obviously right here, right? So this basically right here, when we dropped, price tried to come back, and it didn't, right? So I put my marker right here, and then obviously when you have your closing candle, I like to look at the 30-minute closing candle. Sometimes I look at the hour, and I'll use that as just a tool that I like to use. Is I mark the top and the bottom of that 30-minute closing candle, right? So that's today's 30-minute closing candle. Let me just go into the previous day, which is right here. Right, so Fridays, closing candle. Okay, and then the bottom of that candle, right? So now you have, I'm going to remove this one since that doesn't come into play right now. All right, so now you have some sort of price action for the day. If you don't have price action for the day, meaning that you don't know where the market can go, you can't get into a play. All right, you can't. Matt, when he was on live stream in the mornings, he gave his analysis of where the S&P 500 can go, right? And he understood, he understands where there is some sort of demand and support levels, right? And that's basically the same concept, right? So you have to look at your previous day charts and just to understand where price action can go, right? So then you have your morning session, and you can see that we were bouncing off of that low, right? We basically we almost took out the low from the previous session. At that point, that is your opportunity to try to go into a long position. Why? Okay, so what I really want you to take a look at is this. This is on a 5-minute time frame. I always look at the 5-minute time frame, right? In this vicinity right here, right? This is your 30-minute closing candle, by the way. In this vicinity right here, you see all these buying wicks. These are wicks, right? These are all wicks. How many of these the candles did the body close below, right? You have more bodies closing above that 30-minute orb, the low of the 30-minute orb low from Friday. And when you see this, when you see this, this playing out, this is a time where you can try a call position. Where was your stop loss going to be, right? So the stop loss is always going to be at that moment at the low of the day. Okay, so like I said, when I look at into a play, and I look for, if I'm going to a call position, if I'm going to a put position, there are certain things that I like to take a look at. And for me, that is, where is it consolidating? And at that time, do I like that play? Right. So basically, right here, give me a second. So basically, right here is a time where I would try a call position. Right. At that moment, I would try a call position. And now, if this market structure did not work out for me, basically what I would end up doing is I would take my L at the low of the day, right? Because we hit the low, we bounced off of it, and that was it. Where's my price target going to be? Where's my price target going to be? Right. So my first price target is going to be at the 30-minute orb high from Friday. Or what I have to look at is where's today's high? Where's today's orb levels? Today's orb levels is at 428.08. And so that's my first price action is like, hey, I need my play to hit that target. Once I hit that target, I scale out, I trim out, or I completely close the position because it hit the target that I wanted to hit. Now, if I had multiple contracts, I might leave a runner just to see how it goes. But once your price target's hit, it's okay to take profits. And I think that's where a lot of traders have a hard time understanding that it's okay to take profits when you're at 20%, 30%, 40%. It's okay. It's not okay to have your losses going to 40%, 30%, 40%. That's not okay, especially on ODTEs, especially on ODTEs. No, no, that I just would never let that trade go down to 40%. 20% max, unless I'm doing a lotto play or unless I'm doing like a runner and I've already made enough profits to cover plus double that cover, that's the only way that I'll, let a play go down significantly. All right. So what I look at obviously is a dollar, right? The dollar plays a very important role to me when I'm looking at how the structure is for the day, right? So when you notice that this is more of a bullish structure um, on the dollar, right? So when you see this, you're just zooming out. This is on the 5-minute time frame, and I kind of just zoom out a little bit, right? And I zoom out, and I see that hey, it keeps bouncing. I'm not adding any EMAs or anything like that to it, right? I'm just looking at how the structure is playing out. This is a bullish sentiment, right? So when the dollar is in a bullish sentiment, guess what? The market is in a bearish sentiment, right? Most of the stuff is in a bearish sentiment. And so it doesn't always play out that way, right? There's times where the dollar would drop and the S&P would drop and tech will drop at the same time, right? So it's in the mornings, it works out very well. And then throughout the day, it's kind of like choppiness. And then towards the end of the day, it works out again very well. So, that's why one thing I take a look at is just the DXY, how it's playing out and understanding that, okay, well, hey, you know what? If they're holding this specific level right here, right, from this from this pop, then, it's still considered in a bullish sentiment, right? So you start marking your levels. Now, what happens to the opposite side, right? So if the dollar decides to drop out of here, right? So if it decides to drop out of here, then you're going to make lower lows and you're going to also make lower highs on the pumps. And so that would be the time for you to start looking for call positions if you want to hold your play longer than usual. All right. I'm going to go into utilities. And utilities just took a huge drop, for the last few days. It's just nothing but red, right? Just like, it's just horrible. Like ever since it pumped up here to 65, it's just taken a dump. And so when I got into my first initial play, right? So my first initial play, was basically right around $60. Why around $60? Well, because this is where price action kind of jumped off of in the low of last year, which was in October, right? So that was for me a decent chance to get into a call position to see if it bounces off. Now I go lightly, right? I'm only in very few contracts and I'm out for January calls. What month is it? It's October. So I have November, I have December. So I have 2 months, right? 2 full months. And then January. Actually, technically, it's like almost 3 months, but it's 2.5 months that I have to for this play to work out. Now, the next area that I added today was almost towards its low, right? And same concept. I went back and I felt like, okay, well, why do I want to look at how price action plays out, right? So when I look at this right here, and I'm like, you know what, there is a potential that this can drop here, but there was a pivot point right here, right? So basically, price decided to pop, right? It held and it held very well, right? So my reasoning behind it was that when I look at this overall structure and I see that, hey, we hit that level, right? We hit that level. And for me, that was like, okay, let me try this call position, right? Let me try this call position and see, they added to my call position. Sorry. Let me add to my call position and see how this structure plays out. If it drops more, it's going to go towards $50. So Friday, um, I was actually looking at a $50 put on XLU for November. It was like $8. I had a bid in for $6, 10 contracts, $6, $60. Um, I could have just done the $8 and spent $80 because Bad Boy's up at $30 today, right? And that would have been a nice gain. How far back do you go to find the low or your jumping point? Do you always go back 1 year? No. So I don't always go back 1 year, right? I go back into where price action kind of popped off of. So I'll give you an example. So if we go to the QQQs, right? So the QQQs, what I like to look at is the daily, right? I take a look at the daily, and I start seeing, okay, where was there was some sort of consolidation, right? After a move, in that consolidation, was there a pop, right? And so right here, there was a pop. Right, so that's my very first target that I want to see how this level reacts. And this is only going back towards June, right? I didn't go all the way back because there's no reason for me to go way back when price action is within this range, if that makes sense, right? So when price action is within a certain range, I don't have to go further back. I look at the chart accordingly. So, for example, is if I'm not going to look at the daily, I'm going to look at the 4-hour chart. And on the 4-hour chart, same concept. I'm like, okay, well, where did price kind of, came back down and just popped over, right? And those are like the areas. So now if QQQs fall out of that 351, my next target is going to be 348.18 because that is the area where it popped off, where it came back, where it made a significant move. That significant move was from 348 all the way up to 372. That's a significant move, right? So that's basically what I take a look at. And I want to see how price action relates to that. Then what I do is I go into the 15-minute time frame, right? Sorry, I go into the 30-minute time frame. And then I go into yesterday's trading session. So I go into yesterday's trading. I'm sorry, Friday's trading session, because it's not yesterday, obviously. Today is Monday, right? Yeah. Sorry about that. So give me a sec. All right. So when I look at Friday's session, right, I want to see um, how the structure is for that day. So when I look at this doji candle right here, I would tell myself that, okay, if price action decides on today that it wants to go above that level, right, above this level, I can look for a call position and targeting this area right here because this is where the drop happened, right? So then I just mark my levels in. This is where the drop happened. Then for the low side is like I keep that same level depending on how the market opens, obviously. If it opens within this range right here, if it drops out of it, I will look for a put position targeting what? targeting this session right here, right, which was 357.65, and that was from previous trading session on Tuesday of June 23rd. So those are what I look for, right? And because market structure is within this range, there's no reason for me to look at QQQ all the way at 380 right now or down below to 320. There's no reason for me to look at that because we're in this structure. Why am I going to go further? Further out just to see where price is relatively can go. So I see people like, oh, this might could go to 410 or 400. Well, what's making you feel like it's going to 400, right? There's still support at 420. There's still support at 415. And obviously there's going to be support at 410. Mind you, a lot of people did not expect SPY to hit 420s, right? June, July, bullishness. And I'm sitting over here, mind you, on SOC, stating that, hey, by the end of September, right, or prior to September, we're going to see 430 or lower. Why? Because it was in overbought territory. Just like right now, the market realistically, even though we're like, oh, it was a pump or whatever, realistically, we're in an oversold territory. So sooner or later, we're going to have that pop. Now, what the issue with today is that the issue with today is this. So S&P 500, when I look at, just the regular structure, I like to look at the 5-minute because that's what I'm on consistently. And in this 5-minute time frame, we technically, sorry, this is a Qs. Let me go back into SPY. So we technically went lower than previous day, right? So previous day low was sitting around that 426 area. We went lower, right? We went lower. So now, before we were making a higher high and a higher low. Now we're making a lower low and a lower high. So what do you do? So on this drop, on any kind of pump, if S&P is not overtaking previous days levels, mid-range level, the high of the day, they're having a hard time, or you look at the pre-market, look at the pre-market high, look at the support level, and you see a hard time for them to, you're seeing that it's having a hard time there. That is basically where I would look for a put position. I'm okay with playing the market in two different ways. And I want you as a trader to do the same thing, right? Look at the market. You don't have to play just calls or just puts, right? You could play calls and or puts. Look at, where, as long as you know, or you can kind of tell where there is some sort of support or where there is some sort of demand, right? That's basically what I would personally look for when I'm trading in a day, right? So, all right. So for example, for tomorrow, right? So if I'm looking at tomorrow, because this is basically a nice thing. So we're going to be back here on Wednesday. Okay. So Wednesday we'll be back. I think so on Wednesday. And I'm going to keep this levels that we put out in place. All right. So we're not going to change it. We're going to keep it as is. And we're going to see how price related to that. Okay. So what I do is this. So I go into this time chart and I'm like, okay, well, a couple of the levels that I'm going to look at is this level right here, which is around 424.59. That's my first level that I'm going to keep an eye on. Okay, so I'm marking that level there. Then what I'm doing is that you notice this structure right here, how it came up and then it just kind of dropped and it rebounded off of that. That's going to be my next level, even though we closed above it. That's going to be an important level for me. Why? Because if it drops out of here, there's a huge possibility there's a likelihood for this to come back and retest this area right here. All right. So that's one of my targets. Now on the upside, because the market kind of closed up, where's my next target, right? So from the drop in the morning, right after the consolidation, we had a drop. And that's basically where the next target is at 428.33. Then I go further back and I say, okay, well, where was the next drop, right? So the next drop was right here. And then same thing, right? Why is it not here? And why is it here? Well, there is going to be one here too, but we're going from here to up, right? We're going the opposite direction. So now I have my 429.31 price target. All right. So now this is where where you would be like, okay, well, where's the next target? 431.23. That's the next target because that's basically where the price kind of dropped out. However, there is a magnet level that's sitting right here between the two prices that price can come back to and reject. So I'm going to keep this magnet level in here just to kind of see how that plays out. Now, like I said, this is in a couple days, so we can go up to 431.23. And if we want to go a little bit further out and we want to say, okay, well, where else can price can go to? I'm just going to mark the next level up, which will be 431.94. And then the last one that I'm going to put in is 432.60, right? The reason why I did this one is because it dropped, obviously, then it came back and rejected that area. So there was a nice little resistance in this area. And that's basically where price dropped off on Thursday, where it had a hard time in that range, right? So those are my levels to the upside. To the downside, right, so you got my first target, which is at 429.59. If it fails, it's 426. That doesn't mean that we might not get support right here, right? So there could be a nice little support level sitting right at 425.13. Okay, so we'll keep that in mind. If it falls below 459, where can price go? So we go further back, right? We see, okay, well, pivot points, right? Where did price action pivot the first time it tried to pivot? Before it dropped off right here. That's where price target can go. And actually, it's funny. It's actually right on online. If you look at the low of the day, where did price action just hit? The actual from at that target, right? And that was from me just marking it without without looking at where the low of the day was, right? So just like that, that's price action for you. That's price action for you. Right. So if you start doing that, go back and do that and see how it plays out. Right. So that's one. The following one that I'm going to have is right here, which is at 423.31. That's a huge drop, right? That's a huge drop for it to come back. But I want to see 423.84 before we even see that level. From there, price target would be 422.80. And then furthermore, we would have to go further back out. I wouldn't even just keep on looking at this right here because we know that this is a nice little demand area. But why don't mark the low for this day, right? So I'm going to go back. Now I'm going to have to go back on a 4-hour chart and find out, okay, where was price, at, or where is price can go to, right? So you have this gap right here, which we already have that structure, we already have that price action in place. And so what I like to look at is this bottom of this doji candle, right? So that's my next target to the downside. Following that one, because it's this drop right here, same concept. So I'm gonna look at the bottom of this doji candle, right? So now I have my price targets in place. And so being that I have my price targets in place, now I know both directions where price can subjectively go to, right? So now I can play accordingly to this, right? So I'm not gonna, like I said, I'm not gonna touch this. We're gonna come back on Wednesday and we're going to see if price action held, right? Like where, if there was resistance here, did it break the resistance? Did it go to the next section? Did it get rejected at this magnet level? Did it come back down? Where did price consolidate? Where did it come back down, right? So this is just from today's trading session and previous day trading session. This is how I look at certain things. I could keep marking levels, but there's just too many levels. You got to give it some breathing room. And so that's basically S&P for you, keeping that up for you guys. And excuse me, that's just basically what I see. Now, one moment. You got about 5 minutes to go with me, give or take. So when you're in a play, like for example today, and you decided right at this level, I see a lot of people did it. Um, they got into a put position at this level right here. And you have to think about, okay, why would you get into a put position there, right? So market didn't play out at that time, right? So when we look at this right here, we have to understand that market did not play out over here. And so people were looking at this chop range right here, and they're looking at, okay, hey, I want to get into a put position, right? You took out the low of the day, which was right here. You went below your 30-minute orb levels. If you don't know what your 30-minute orb levels is, there are numerous videos out there. I'll try to do one on another day. So this is your high 30-minute orb, and this is your low 30-minute orb. Sorry, this is not the right one. All right, so that is right. This is 10 o'clock. Yep, 10 o'clock. All right, so this is your orb high, right? So you have your orb high, your orb low. You got to wait for confirmation. Did any of the candles close below the 30-minute orb low? No, not at all. So why would you want to get into a put position then? They're obviously buying it back up at that level. Why would you want to get into a put position at that moment? No candles closed below this 30-minute orb. And you need to understand that, right? So this is where your 30-minute orb was right here, right? This is where your 30-minute orb laid. And none of the candles, right? We're at 11 o'clock, 1 hour into the market. None of the candles closed below the orb level. So there's no reason for you to try to get into a put at that moment. There's no reason, right? That's when I said, hey, I would personally look for a call here, and my exit would be at the low of the day. My risk level is very low. Why? Because if it goes lower, then I know that price action could subjectively go even lower, right? So then I would have to look for my next price targets. Where will price action go? Now, same concept to the top side, right? Playing calls off of an orb breakout, it's not a bad idea. It's not, right? Because a lot of traders do that. A lot of traders or gurus out there, they do that, right? They wait for that orb breakout. And when they play for that orb breakout, you're expecting move is a solid move, especially if it breaks out a little bit later. However, I always pay attention to the 5-minute time frame, and I'll wait, right? And I'll wait for the next 5-minute candle to see how it reacts, right? You have the doji candle. Do I really want to try a call here now, right? Do I want to try a put? It gives you that, I don't know, at that moment. Obviously, we see what happened afterwards, but at that moment, I don't know, right? I don't know if, if this is a good moment to get into a put, but I can try it. Where's my stop loss going to be? At the high of the day, right? Understanding that you're getting calls towards the bottom of where price action was consolidating, and you're getting calls you're getting calls towards the bottom, and you're getting puts where price could subjectively reject. There's resistance. Now, you're finding the trend at the same time, but there's no trend here, right? People are like, oh, but you're finding the trend. There's no trend. What gives you this entire move? There's no trend. There's no trend to the downside. There's no trend to the upside. There's no trend. Like DXY, when we looked at DXY, that was an upward trend. This isn't an upward trend. This isn't a trend, right? This was no trend whatsoever. So then price came back, and what did it do? It fell straight out. Boom, fell straight out. Now, if you missed this drop, what do? You wait for the next pullback, or the next time where it tries to interact with the orb low, the 30-minute orb low. And if that rejects, get into your put position, right? And at that time, put position would have been right around 2 o'clock. Now, this is where the contracts are a lot cheaper. And you can make a subjectively quicker move and say, okay, I'm going to retest your certain levels because you already have these levels in place. And this is where you want to wait. So regardless of this entire movement, why? because this takes a while to move. Look at this chopness right here. If you didn't get in at the right time, so if you didn't get in over here on these drops and you came into the market and you're like, I'm going to FOMO in. No, market gives you opportunity to make money throughout the entire day. So at 2 o'clock, when it came back up, this was your perfect opportunity to try a put position. Now on SOC trading, I gave out a call position and a put position on SPX. And the call position hit 200%. The put position still went up at about 60% or whatever. Why? Because same concept. When this was right here, going to that upside right here, this move from this moment to right here, I knew that we're going to try to test the 30-minute or low. So why would, and especially on SPX, this is a bigger move than it is on SPY. So this is where I would try my call position after this move, right? After this entire move, because why is this here? Well, because you look at the previous candles, you see that it's trying to break above these candles right here. And then if it does break above, you'll get that nice push. And then the following time, we got that puts like that. Once it breaks that, you get into your puts because the target price would be at your levels again, which it hit. And obviously, you're going to go back into calls. And everybody's going to say that you could have got back into calls. But, at that moment, I don't trade. If I feel like, okay, you know what, like it's just being nonsense, right? And this is basically a lot of people like, okay, well, it's a chop. This is not really a chop. It gives you buying opportunities and selling opportunities. So this is just something like I just wanted to kind of go over. Obviously, this is just a first after hours. I want you guys to keep asking questions in the future. Look at charts. I really wanted to look at charts to kind of give you an idea of where to get into a position, especially for swing plays. I don't just do ODTs. I do swings. Why? Because there are certain stocks and certain ETFs that is oversold, right, or overbought. And tech is one of the ones I like to take a look at. And I'm going to tell you this right now. October is going to end green on S&P 500. I don't know about QQQ, but most likely you're going to hear this from me. S&P SPY is going to end green for the month of October. That's my prediction. It's my prediction that we're going to end green in the month of October based off of Friday's close, right? So wherever Friday closed at, because that is your month end, SPY is going to close above the low wherever it closed in September. That is my prediction. Why? We'll talk about that on Wednesday. But there is a reason why I say that, right? So we'll talk about that on Wednesday. Until then, thank you for joining. And I hope to see you guys soon. And we'll see you soon. Take care. That didn't look too good. I'm trying to get my live team. I'm still here. I need you to exit me.